What's up, YouTube family? I wanted to give you a stock market update today and talk about a particular topic. Something that I've been getting questioned about a lot lately is the inverted yield curve. When is it going to invert and what's taking place with the yield curve? I made a video about this a long time ago, but I want to dive back into it today. So I want to give you some tips on how to position your portfolio as the yield curve flattens and potentially inverts, and what you should expect from the stock market going forward. Stay tuned, we're going to talk about all that next. What's up, everybody? My name is Paul Zachary Shelton Jr., and I'm the Chief Investment Officer and the founder of Warwick Shore Advisors. We are a wealth and investment management firm located in Orlando, Florida, with clients all across the United States. This is your first time coming to our channel or seeing one of my videos, I ask that you please hit that subscribe button. Please ring the bell so that you can get a notification each time we upload a new video. And lastly, please give us a thumbs up. Please like this video to help us spread the financial literacy in the world. So today I want to talk to you about something that is going on currently as we are moving through the markets at this moment right now. So we're continuing to see a flattening in the middle of the yield curve. Typically, when you see the yield curve flatten, it does signal that it's going to invert and pretty much lets you know that we're going to be due for a recession. It has been 100%, or I should say there's been 100% success ratio of an inverted yield curve leading to a recession. And this does include when the economy was doing very well in 2019, and the yield curve did invert. And though the economy was doing well, we did see some cracks, and we did see where the economy was weak when we had the recession that was induced by the pandemic. However, the pandemic is starting to move behind us. We don't have all the issues of the pandemic or any major health issues, knock on wood, hopefully nothing returns. But we do have a Federal Reserve that is in the notion of monetary tightening. And with this being the case, we're going to see higher interest rates. As interest rate hike expectations get pushed into the future, short-term treasury yields have risen more quickly and more aggressively than long-term rates. The spread between the 2-year and the 10-year yields has fallen steadily to now about 20 basis points, or roughly, as I look at my chart, about 17 basis points. This has been starting the debate around a potential recession on the horizon. Inverted yield curves have frequently preceded recessions, but the last time the 210 curve inverted, as I mentioned before, in 2019, the economy was in a relatively good shape. And it was really the course of the pandemic that caused that inversion, or that caused the recession that we saw there. Some things that you should consider whenever you're seeing a flattened yield curve, or you're seeing a yield curve that's moving from a contango, which is an upward sloping, to more of a backward dated yield curve, which means that long-term prices, those 30-year, 15, 20-year treasuries, are yielding much lower than the short-term treasuries, which are the 3-month T-bills up to the 2-year treasuries. So whenever you see a yield curve that looks like a slide that's going backwards, know that potentially, and 100% of the time, as history has shown us, a recession has occurred. Now, how deep the recession will be is going to really depend on how soft of a landing we're going to have, and typically how aggressive the Federal Reserve is in raising interest rates. The notion is that they will raise rates by at least 50 basis points in the upcoming May Federal Open Market Committee meeting. If this is done, and it continues to do so throughout the year, it is very possible that we will see the economy screech to a halt or slow down extremely fast. And the potential issues that we see with this is the economy is essentially a runaway train that is barreling down the tracks. And when you stop that train with such force so quickly, there's still going to be a lot of momentum from the cars behind the engine that are going to continue to push forward. And then that's when we see crashes in the economy. Not saying essentially that we will see a stock market crash or we will see any heightened volatility, but it is very possible that as interest rates increase, organically and artificially by the Federal Reserve raising interest rates, that we will see heightened volatility going forward in the market. Typically, after the interest rates are the initial interest rate hike that takes place in the market, the S&P 500 has a gain. So it's a lot of room, or there's a belief that there is about maybe 8 to 15 months worth of runway potential before the effects of these interest rate hikes really take effect and cause a potential recession in our economy. So in the short term, it is very possible that you can still make a lot of money and still be a very prudent investor by staying heavily invested in the stock market. Although as time shifts and as the yield curve inverts, and if the velocity of interest rate hikes continue down the path that we see, we're going to want to shift away from more of those growth investments and lean towards some of those value investments on the stock side. Also, you want to broaden your portfolio to incorporate more asset classes as opposed to just stocks. You want to incorporate fixed income, alternative assets, and those real assets. Real assets typically fall into the range of commodities and real estate because they play a great hedge against inflation. If you have any questions about anything that I mentioned today, please leave a comment below. Please give me your thoughts and let me know what you think is going to happen. Do you think we're going to see a recession from the inversion of the yield curve, or do you think the yield curve is just going to flatten but not necessarily invert? I'm interested to hear all the comments and read all the comments below. Again, you can reach me at investments with an S at warwickshore.com, and make sure that you hit the subscribe button, ring that bell before you leave this channel. Thank you so much and have a great day.